Hey guys, how we doing? Welcome to Ready Set Live. It is Wednesday, January 22nd. How's everybody doing? Where's everybody coming in from?
Oh, they're just tuning out of the impeachment proceedings.
uh,
So thank you guys for taking a break from your diligence of keeping up on the trial. I'm sure everybody's riveted to what's going on.
Glued to
How's everybody?
C-SPAN.
Oh, my Lord. It is the most painful thing I've seen.
Yeah.
But how are we doing out there, guys? Where is everybody dialing in from today? What's happening? So, Mav, you're out in Los Angeles.
I
I'm
am.
out in Greenville, South Carolina. We're getting a little bit of a cold snap. Finally, winter hit us 3 weeks into January. All right, we got Ray coming in from Philly. We have Dill 88, 899 from Cleveland, Ohio, my hometown. All right, we have the Virgin Islands. Be interesting to know, Jim, where exactly in the Virgin Islands are you from? I was out there a couple years ago, and I am dying to get back there. Peter from Switzerland,
I'm
Travis
diving
from
to get back there.
oh
Lauterbrunnen.
oh man, I went on this boat called the Bad Kitty. I've never had so much fun in my life. We have Sweden, Australia, Utah. Utah. We have Toronto, Mongolia, Ulaanbaatar, London. Hey Byron, San Francisco.
Someone's at Davos.
That's cool. Isn't that where the what
World
did they just have there?
World Economic Forum.
Oh, no kidding.
Mhm.
The Spanish chicken. Nobody expects the Spanish chicken from the UK.
Someone's from Earth. Oh man, we gotta.
Speaking of which, if we could have a moment of silence for the passing of Terry Jones, one of our heroes. So I'm a bad parent. I used to let my kids watch the Holy Grail when they were like 2 and 3 and 4 years old, and they have been warped for life.
If anyone
All right.
hasn't seen it, the full thing's on YouTube. So go check it out.
Really, the full thing's on YouTube now?
Yeah.
Well, they've also been playing it on YouTube TV, both, well, not both movies, but that Life of Brian. He's not the Messiah. He's a very naughty boy. I could go all day. What a life changer. Hey, everybody. So, Mav, what do you got today? Anything that you wanted to bring up for us
Well,
before I get to the charts?
I want to just kind of address sort of where we are, what we've been doing for the past couple of weeks, just in terms of the overall market, because I think that's what everybody's paying attention to. Certainly, we broke 9,000, came back, and at this point, everybody's paying attention to some of the major, I would say, trends, be that from a technical analysis perspective, as lots of the moving averages sort of consolidate, as Bitcoin's price starts to exceed them. Uh, cool to see. We're also seeing from a fundamental side, just a lot of, energy with more institutionalization, coming on board, Bitcoin options and futures, starting to really heat up with that. And that's cool to see. And also the having, Ethereum 2.0 competition from, digital sovereign currencies. So a lot of just really interesting stuff. But yeah, I figured today we typically go through, death by PowerPoint, what is it? Power corrupts, PowerPoint corrupts absolutely. um, I figured we'd take a break from that this week, just because I think it's, really the question is, what is going to drive Bitcoin to, break through 10,000, but also continue to do so. I see everybody making their predictions, getting real excited. Like, oh yeah, here comes the bull market. Yeah, it's going to go to 100,000 or something like that. And fundamentally, what we want to see is just, some of the same stuff that we've been looking for the last 2 years. Does the market support Bitcoin resurgence? Does the overall space sort of, as we've seen it grow up, as we've seen it mature, is it ready to see that, return to 20,000 and then beyond? I would say yes to the affirmative. I think we've really seen the space grow up a lot. So not just from a technical perspective, but also, like fundamentally, it's a very different space than it was 2 years ago. And that's cool to see. So yeah, I think there's a lot we want to look for. Just coming into this year, getting excited about blockchain again, getting excited about seeing blockchain utilized in different ways that we haven't seen before. The confluence of other emerging technologies such as AI, big data, 5G, blockchain interfacing with all of these. That to me is some of the better aspects, the better potential of the space over the next 10 years. And starting to lay the groundwork for that, I think this is really important. So yeah, I think we're excited to see some resurgence in Bitcoin. And yeah, with that, I think Doc, that's a good segue into talking about the charts a little bit.
Okay. A
Let's
little
take it
bit
away.
of charts.
Yeah.
Take it away. All right. So I've been busy coming up with coming up with lines here, which is I'm a bad boy. Okay. So people's front of Judea.
Oh, why does it? Oh,
Okay.
give me a sec. It always does this. I don't know why. Um, sorry, guys. One sec here.
Okay. Tell me when I'm sharing this chart.
All right. Yeah. Just want to make sure. See all the goodness. All right. That's good enough. We'll run with that.
Is it showing the whole thing?
Yeah.
Okay. All right. There we go. Okay. So what on earth do I have here? I have the 10-year Treasury note yield. So this is colloquially called the 10-year note. And what you can see by this is these are effectively interest rates. So 2%, 1.5%, 1.3%. So if we pull this out, this is a weekly chart. If we kind of pull this out to a monthly chart, we can see that we have kind of an issue down here at about 1.4% or so on the 10-year note. And my friends, this is a little bit of a bear flag sitting here. So if we do see a break below this flag pattern on the 10-year note, what that means is that's interest rates dropping like a stone, which is not particularly good. I think that we'll have, at least initially, the equity markets will probably be the beneficiary of this, as well as the cryptocurrency markets, as well as gold and silver, things like that. But ultimately, if this gets too low, this is going to cause a huge amount of uncertainty. If we really start driving lower, people are going to freak out and say, oh my God, here comes negative interest rates. And this is going to be a bad, bad thing with the uncertainty. And of course, I think cryptocurrencies will be a beneficiary of that. So watch this carefully. This is going to be the biggest tell, I think, in the near term future as far as what's happened, because this is a massively, just a massive break. If this goes down below here, it's going to affect just about everything that's out there in financial markets. All right, if we go over to our friend BTC over here, we got some interesting things going on. All right, so we've had our little breakout from the inverted head and shoulders pattern. We've driven higher from here. What's also interesting, if we pull out the probability cones right now, from the probability cone that we pulled out for the expected move a couple of weeks ago, this is actually much, much higher than that. So we've driven a lot higher from here. I drew a new probability cone into the end of February, and you can see that this is going to go anywhere from about 10,000 down to about 7,400, which is good. So this is, I mean, ultimately, we're not going to go, if we end up going higher from here, we're not going to shoot to 20,000 next week or anything like that. What I want to see is I want to see the market transition into what's called quiet and trending market character. And this is more where we get that stair stepping effect, or we can also get the sawtooth, just absolutely, just pullbacks like that. My preference would be if we get the stair stepping mode, because this is what we're seeing now. just breakout consolidation. And then we can also use the chop index to help us understand what's happening with the power of the consolidation. So right now, this one doesn't look like it's just ready to go yet. Keep an eye out though. Markets can move two ways. We had the same thing happening over here, and this decided to break much lower. All right. So it's going to break from one direction or another. It's okay if it breaks down a little bit. And this is why I've got the fibs on this thing. You can kind of frame in the action with the fibs, the Fibonacci retracements from this break. So as long as we stay above the 38 to 50% or as far deep as the 61.8% retracement, which is about 77.45, we're in good shape for perhaps this breaking higher. We'll keep an eye on it. Now, the one thing I do want to bring into your attention is, let's see if I can find something that's a little bit less messed up here. This is still a weekly chart downtrend, guys. Still a weekly chart downtrend. This is still lower highs, lower lows. So without drinking too much Kool-Aid here, until this is able to do one of two things, it's either going to have to break higher into a new high to begin the process of then transitioning to an uptrend with a higher low, higher high. That's one way that it could do it. The other way that this could occur is if we have something happen like this. And this to me is more likely is that if we pull down just a little bit to form that higher low and then break higher above about 9100 to form that change in polarity and get this moving into an uptrend again. And if that happens, you're going to see a lot of other coins as well too. Now, there's a couple of altcoins that I like in particular. One of them is Chainlink. Chainlink is doing really nicely right now, and you can see this consolidation. This is transitioning into that quiet and trending that I talked about. So if we get a breakout above here, which is going to be about just below 32,000 sats, this is going to be a nice long setup into a weekly swing. Another one that I like as well too, and this is kind of an odd one. This is Ocean versus BTC, and what we have is a nice descending wedge pattern, which is really good. And I like the fact that we have a higher low setting up here. If this sets up as a higher low and breaks above about 450 in terms of the 450 sats like that, that'll be a nice long. This will form the trap, a higher low, higher high, off she goes. Shorts will be covering. There's plenty of energy on this one. So I like this one if it's able to break out and above. Otherwise, I have to wait for that because right now, the shorts, if you weren't short here and all this, this is where people say, oh, I'm finally have the courage to be able to short this thing. And this is what creates that short interest if they step in way too late into a trend. All right. So that is kind of my market update for right now. We're kind of in waiting mode. So with that, let's see if I can throw it back to you. There we go.
Oh, maybe.
All yours.
Oh man, gotta figure out this streaming software. Okay, cool.
I'll check the chat room here to see if there's any questions.
Yeah. You know, it's funny to me what we've been talking about for the last couple months has really transpired over the first couple of weeks of the year. You know, we've talked about the sort of most important things just from a fundamental perspective uh, regarding seeing potential positive Bitcoin price development is around both developments on the institutional side as well as friction from the geopolitical macro side. And certainly this year, with Middle East tensions and with more institutions coming on board, both of those have really contributed to a higher, breakouts for Bitcoin. So I think that's the trend we'll continue to see. Maybe not to this degree throughout the rest of the year. Certainly, I wouldn't want to see rising Middle East tensions or anything like that. And certainly, I don't want to see an oversaturation of institutions coming on board. But it's definitely proving again and again this thesis of what Bitcoin represents in 2020 as a macro hedge, as a crisis hedge, as digital gold, and really the onboarding vehicle for cryptocurrency as it relates to the rest of the world. Guys, there's only 40 million total blockchain wallets in existence. With some degree of contributable funds, that are test wallets or something like that. That's nothing as far as I'm concerned. We're barely scratching the surface of what this asset class is and what it's going to become. Bitcoin over the last 10 years has gone up 9 million%. So it's there's unique properties, I would say, to what we see here, and I think over the next 10 years, it's continue to prove that it has semblance to existing asset classes, gold particular, but at the same time, it's defining something new, and will continue to do so. So yeah, very exciting times, I say.
A lot of the, I would say, cryptocurrency purists are not happy with institutions moving into the space. And I guess I'm not sure that I really understand that sentiment. I mean, I suppose I could if you were there at the very beginning, if you were the person that proofread and kind of, checked the white paper from Satoshi,
Yeah.
then you probably feel like, well, this is a perversion of that. But look, any fungible asset out there is going to be part of a market.
Yeah.
And if it has liquidity, then it will be traded. And overall, I don't really see what the bad, yeah, I don't see what's bad about that,
Yeah.
because that is where you get supply and demand, and that's where you get liquidity, and that's where you get a fair market and not one that's been manipulated. It's, if you want to take an example of, say, something like eBay. So if you put a device on eBay, in some ways that's really not a fair market, because you can do whatever you want to with that. You can accept a bid offline and you can just shut down the auction and say, the hell with it, I'm taking this home. Or you can actually cancel the bid from somebody and say, I don't like you, or I've decided to sell it on some other channel, and so therefore I'm going to take this off. I mean, it's not really a fair auction. It's not really a fair price discovery for something like that. So that's an example where you can just sort of do whatever you want to. Like, my son went to buy a motorcycle 2 weeks ago. This is another example. And he made a verbal offer to somebody for a certain price, and that was accepted. And then he gets a text about 3 hours later saying, sorry, somebody came by with all the cash and just bought it. Like, it's not a fair market. They can do whatever they want to do. And that happens to both buyers and sellers. But what happens is, when you get liquidity as part of this, when you get institutions in here, then you get massive amounts of volume. And then it becomes a much more fair market. Markets are much more fair when you get a lot of people, in fact, millions of people in them. And liquidity drives things, and it's much easier to get in, much easier to get out. You don't want to be trading a Roach Motel that you can get into, but you can't get out of the position. And that's possible to do with some assets that are illiquid. So to me, don't quite understand it, but perhaps those people just haven't had that much experience with financial markets yet.
Yeah. Yeah, I would say a note regarding institutionalization. People like to compare blockchain, Bitcoin, to the early '90s, in terms of the internet, and how there was this sort of nebulous, very transformative technology, the internet in its early days, but it really lacked form and substance, and it really took several iterations, several trials and errors of permeations of what is this thing? How can it be utilized in the larger world? And ultimately, it needed, to a degree, institutionalization to come in and help provide the rigidity that would allow it to become ubiquitous, so that you can't really go anywhere, at least in the developed world, without interfacing with the internet in some capacity in this day and age. People like to make this simile of oh, Bitcoin is like the internet in the '90s, but they don't complete the analogy, in my opinion, is to say, all right, what comes next? Where do we go from here? To my point I just made, there's only 40 million blockchain wallets. How do we expand that? In one degree, I would say, it is acknowledgement. It's getting more exposure to the space. Very interesting ways we can go about doing that. That's I think one of the best things about the sort of ICO boom and bust and the continued development on Ethereum is it's really trying to answer that question of how do we get blockchain into more people's hands, and how do we find different ways to make that something that's desirable, something that's flexible, something that's usable, something that's friendly in terms of adoption. And yeah, there's always going to be that. Another example would be to not think of users as just simply humans, to think of the AI economy, to think of sort of machines paying each other with this many different possibilities that sort of open up to us once we stop thinking in terms of linear black and white situations that I don't think benefit anyone to I mean, who are you to say what who can and cannot use an open source technology? That defeats the whole purpose of what the space stands for. And yeah, I get the meme of Wall Street bad. Believe me, I think Satoshi like understood that, and the timing of the Bitcoin white paper certainly reflects that. But at the same time, this you know an economy is not what we say it is; it's what it is. And it really is defined by the who utilizes it, who uses it. There
we
will
get
always,
into we get into trouble when we start to put political pressure on financial
yeah,
markets.
yeah,
When you've got political pressure in the financial market, that's when like a Wall Street's going to take a black eye for that. And it really wasn't Wall Street's issue; it was the government.
yeah.
So anytime we try to socialize a financial market, take something that's meant to be free and open and fairly traded, and then sort of coerce it in a direction. And so I'm not really, if you guys are not happy about where the rates are heading and everything like that, I'm right with you, because I think this is a horrible experiment. We tried to 10 years ago. This has been going on for 10 years ago. Now, actually, well before that, because we were pumping the M2 money supply back at least 15 years ago. We started, we stopped reporting the actual money supply numbers. So they're sitting there in the basement, just printing dollars. And at some point, this grand experiment will go away, but it's forced people to become part of the investor class now. You can no longer just sit there and collect interest on bonds and savings account, which has forced people to become much more, um, diverse and educated in finances as well too, because that's the only way you're going to get any yield anywhere is to take risk on.
Apparently, I'm deep behind enemy lines here in California.
Yeah, yeah, you're our plant.
I would say, yeah, the median housing prices here in California, especially in Southern California, definitely due for a correction of some kind, or some sort of capitulation by the legislation as it relates to zoning laws. I think that's one of our biggest issues here in LA. But that's a microcosm of the larger problems that, that are plaguing such markets right now. But yeah, interesting times, guys. What else you guys got? Let's close this up with some questions, because Doc and I can ramble on all day, but we don't want to bum you out. Like, there's change is hard. It is never a thing that happens easily or overnight. But certainly, as it's proven over and over again through human history, change, while it may seem scary in the moment, or there's many branching possibilities in front of us. Ultimately, as long as we try to enforce these sorts of the sort of morality that defines what blockchain is, to a large degree of tech going forward. As long as that is sort of central tenets of how we operate by, there's we're going to be okay. But it certainly is a time of transition and flux. So yeah, I get the sort of miasma of possibilities before us.
I guess my parting thought for you guys here today is seek to think independently. And that is becoming more and more of a challenge in today's world. Think about this for a second. A lot of you have grown up on basically outsourcing all your decisions. What do you do if you want to go to a place to eat? What do you do? That's the first thing you do. You go check Yelp and you see what the reviews are. What do you do if when you go to buy something, you go onto Amazon and the first thing you do is to go check the reviews and buy the highest rated thing? Right? So the same thing, you guys are just assuming that you can do the same thing towards financial markets. Well, let me go on there and let's see how many stars this coin has, or let's see what people feel about this in Twitter or some other, Reddit or something like that. And what you'll find is that invariably this will give you what's called a cognitive bias and will automatically make you part of the investing herd, which a financial market's job is to inflict the greatest amount of pain on the largest number of people. That's the way that it works. And it's not because the market is some evil creature or it's some kind of Wizard of Oz thing with a dude behind the green curtain. It's not that at all. But people will take action to prevent pain, and in doing so will actually become their own worst enemy. So my admonition to you guys is to learn to think independently, and many of you already are. That's the reason why you're here in the first place. But separate yourself from the crowd, and it's very difficult to do that in today's world because everything is forcing you towards the crowd into normalized behavior. And so for you to be successful in this field, you have to be able to think independently, get away from your cognitive biases. If this is all new to you, you got a lot of reading to do. There's a lot of places you can start. So let me know if you guys are curious about that.
Yeah, to the question about storing Bitcoin without exposing, what you're basically asking is how do I store Bitcoin without exposing a private key? That's exactly what a hardware wallet is. And so even though Ledger Live is a desktop application that does need to interface with the Bitcoin blockchain, so it needs to be online. Even though you're doing that, the actual private key is still going to be stored on the physical hardware wallet, so it's offline effectively. So yeah, I would say Ledger is one of the better options out there. I haven't really done a lot of looking around recently as to the hardware wallet market. Just got a couple Ledger Nano S's and called it a day because it worked pretty well for me. But yeah, like you said, do a paper wallet, hardware wallet. Both are very good options depending on your need for access or not. Security is really just a spectrum between convenience and absolution as it relates to how secure do you need to be versus how convenient do you need the access to be. So, yep. Cool. Any other questions, guys, before we wrap things up? Oh, there's a question about Pref Logic. Pref Logic is to me, based on what I've seen and how they're moving forward, they're targeting the real estate market somewhat. So the REITs, that's very exciting stuff. Their partnership with Prime Trust was, I would say, a very good sign that they're moving in big ways. So yeah, I'm interested to see where they go in 2020, but I would hazard a guess to say that they're going after some sort of broker dealer license or to be some sort of exchange of some kind. So yeah, more exciting stuff on that. Anything related to digital securities, I think, is very exciting stuff. And Pref is definitely kind of leading the charge in some of that. So let's see. Yeah, so the Ledger server, what you need to know is you're not storing your assets on the Ledger server. Um, what you're doing is you're essentially interfacing with how Ledger talks to the different wallets that are incorporated into the hardware wallet. You're not actually exposing the private key when using a hardware wallet like that. And if their server goes down or something like that, that you'll be fine because the actual assets are stored on your hardware wallet. And so the same thing's true for something like a myetherwallet.com, where it's an online wallet, browser based, and you can store your ERC20 tokens and things of that sort on there. But the question is always, well, what if my Ether wallet goes down? You can still run an offline version, based in your own browser, just by reconstructing their code base, and, doing the same thing. So there's not this danger that there's not a centralization danger that might exist with something like a database, where if the database or the server goes down, you're screwed. Not so with a lot of these best practice type digital asset storage solutions. So yeah, you should be safe so long as it's on the hardware wallet itself. Uh, we can't answer any questions about taxes. Sorry. We would get in trouble.
No, it's just, I mean, you've got all the information. I mean, if you do the transactions through the broker, you can generally just send those off to. It depends if they send you a 1099 at the end of the year. Most of these don't. So you would have to technically send them off to your accountant and then let your accountant figure it out.
Yeah. Yep.
And so there's a question about can you use a VPN to get around KYC? No, you can't. Because if you think about KYC, for those of you that have gone through Bittrex or Binance or any of the signups where you're sitting here, like you're doing this kind of thing, like holding up your address and your driver's license and all this other crap and trying to you got a post-it note with today's date on it and your name and everything like that. You need like four hands to be able to do that and take a selfie. But that's what KYC is, where you actually have to know your customer. You have to prove who you are, who the entity of you is. But most places now, like most of these brokers, that even includes Deribit, at least for another couple of weeks, will take your, just put your name and email address in there. And as long as your IP address doesn't match which the blocked countries that they have to scan for, they'll let you sign up. So you can use a VPN for a sign up for a non KYC provider. And then after that, they honestly don't care. At least that's what I found. But for companies that are doing KYC of any type where you actually have to prove who you are, I don't know how to get around that. And that's not something we want to get into.
Yeah, I would also say VP the point someone made about VPN alone is not enough. I would agree with that. A VPN will mask your IP, but it will not protect you from bad browsing habits. It will not protect you from someone stealing your password or phishing your identity. Um, I would say true anonymity. Hate that word.
And anonymity.
Anonymity uh, comes from a variation of layered security solutions. If in my opinion, the most secure solution you could probably orchestrate with little, I guess, time or energy or money, would be to use a flash drive, install Tails Linux. That comes right out of the gate with a lot of the security features you need. Honestly, a VPN, you probably won't need it on Tails for most. pri- You know, people like to think that a VPN is a bulletproof solution or something like that, or that it's always going to protect you from everything. It does. It's good for for public Wi-Fi, but if you're just browsing from home, Tails is going to do enough right out of the box that you don't need to. Anyways, and then yeah, using a password manager is also a really good idea. And yeah, just finding ways to encrypt uh, whatever traffic you're sending out or receiving, or you know just there's a lot of really good ways, simple ways to start to take security more seriously, because if someone compromises, let's say they do a SIM swap or something like that, you're in a bad place very quickly. So I've heard many people in this space that have been taken advantage of or have lost a lot of money because they didn't take security seriously. So I would say in 2020, make it a priority to at least do the bare minimum and get a VPN and a password manager. If nothing else, that would, I would say, help you with 90% of your needs. So yep, uh, very
Hey,
good.
hey Mav, RJ's got a question about how is it possible for you to bypass KFC?
Well, you take a left and then
But now you found some superior chicken in your neck of the woods, haven't you?
I would say so. Yeah.
Was that hot takeout, or what was that one that you spent like 4 hours in line to get?
So that's Howlin' Ray's here in LA. It's sort of a meme. But yeah, for our non-US viewers, KFC might be popular where you are, but here in the States it's disgusting and dirty and
What was it called when we went up to Montreal? Was that PFK or something?
I don't know.
Don't you remember that?
um
It wasn't KFC. It was like PFK.
oh. French fried chicken or something.
Frickin' chicken. I don't know what it is. Okay, so let's see. Maybe you can answer the question from RJZ about accessing private keys in your ledger, even if the ledger suffers down indefinitely.
No, no. Uh, all you need is the Ledger like Chrome extension, or you just need a way to interface with that. You're not gonna get a plain text a private key from your Ledger, because that's the whole point. It's intentionally obfuscating it from you. It's intentionally keeping it secret from you and everybody else, so that you don't have the possibility of writing it down and then losing it, or for someone to intercept that. It's doing all that work for you. So all you need to remember is the pin that you manually set. So long as you have that, and so long as you write down the seed phrase for the ledger and keep it in a separate place from your device, you're good. You just need some of the ledger software. You don't need to. You won't lose functionality if there's an outage of their server or something like that. So yeah, hopefully I'm making it clear. Which password manager? I like 1Password, and then LastPass, I think, is also a pretty good solution. There's also a question about which VPN. I like private internet access. I found them to be cheap, effective, and they allow peers, which for those who are sailing the Caribbean with black flags. It allows you to do what you want to do. So just keep that in mind. I would also recommend something like there's a piece of software called PeerBlock, which will block a lot of known tracking IPs. So, between a VPN and peer block, I've never gotten a nasty gram, if you will. So,
Hey guys, just a quick note. We're working with a new partner. We're gonna announce this here really soon, but we're coming out with an Elliott Wave class. So we will be on here sometime in the next couple of weeks to give you kind of like a preview to that. So we'll talk about, so for those of you that are traders, like to do the thing intraday and are looking for a different, very solid technique, Elliott Wave's been around, for a long, long time. So really since the Dow theory sort of stuff. So we're going to be doing a presentation on that. I don't know, sometime in the next week or two, once we get critical mass on the program itself, and then we'll expose that to you guys. I'll let you know about it. Otherwise, join us in the Omnia.
yeah, yeah, we still have a coupon for those who are interested. Both our two most popular trading courses are Fractal Energy course as well as options. Oh no, I'm sorry, it's our futures course and our options courses.
Yeah,
All right.
everybody's trading futures right now.
Yeah, yeah. So if you would like to learn some of the tips and tricks and best ways to do something like that, Doc taught these courses, and I think they're about 3 hours each or so of content. So it's pretty pretty solid stuff. Um, but yeah, at checkout, use the code 2020 to get 25% off. I don't know, did I make that 20% off? It's a percentage. It's a good healthy percentage. So, and yeah, I think those are going to be some great ways to trade the markets in 2020. So definitely check that out. And if you'd like to have access to our entire course catalog, please consider joining Omnia. It's our all you can eat service, and also gets you access to our newsletter as well as our community Discord. So we have a lot of fun.
That's where the really smart people hang out.
I would say
We've
not
got
at the
some
KFC.
really, yeah. They turn left at the KFC and they hang out with their Discord.
Oh,
All right. So everybody, back to the impeachment hearings. Good luck with that, and thanks for hanging out with us here today.
See you guys. See you next week. Cheers.